Moon Gang.
What is going on, Goonies? I hope you're having a good evening, a good night, a good morning, a good afternoon, whatever time it is for you. I hope you're having an absolutely phenomenal one. And man, oh man, am I excited for this show because we're going to be talking about a lot of fun stuff. We are officially at the start of earnings season. So we're going to talk about that. A lot of earnings things going on. And we're also going to talk about the general economy, the general market. And that's when I'm going to start to gaslight you. Because at first, you're going to be hearing a lot of doom and gloom. And then you're going to be left scratching your head thinking, wait, that last thing didn't sound so bad. So why was he being so doomy and gloomy? And then I'm just going to leave you there at that. So there's going to be a lot of emotional whiplash in this particular video. But really, the pinnacle of this video, the climax, is going to come right at the start, as it should. And it's all about Kanye, our boy Ye. We got to talk about Kanye West and Parler. Crazy development, breaking news early this morning. So we're going to be getting into that. And after all that, obviously, I will turn it over to you for whatever questions you particularly have. So with that all being said, let's rock and roll. Very quickly, a shout out to today's video and stream sponsor. I'm talking about Public. If you want free stock anywhere valued from $3 to $300, check it out. Free stock, no payment for order flow, no market makers. And check this out. Get up to $10,000 when you transfer your account from another brokerage. Obviously, top of the chat, in the description of the video. And from there, just so you know, it has also a little bit of a social media aspect. You can follow me at Matt_Kohrs. You can see what I own. You can see what I don't own. And a little bit of a side note here, not on Public, actually, no, truly also on Public. Today, I loaded up on more Rumble, ticker symbol RUM, and I finally got into some Occidental. But just so you know, I did that in my long-term retirement account because I think I might be in both of them for quite a while. Now, with all that out of the way, let's talk about how stocks did, and then we'll get into why everything is beyond crazy. The Dow closes up 550 points. Nasdaq pops more than 3% as strong bank earnings boost volatile market. Just so you know, seasonally, this month is very strong, but also this week is very, very strong. If you look at this particular week of trading, the last 14 of them, like just whatever we are, the second, third week of October, the past 14 years, so a decade and a half, only one has been negative. So seasonally, the month and this particular week, very, very bullish. And it looks like we're starting off pretty strong. I mean, in fact, for those of you who would prefer to look at kind of our color graphics here, because, hey, I get it. Coloring's fun. Adult coloring books, I'm all about them. Green, green, green. A massively awesome day. Now, don't forget, that's one particular day. The market is still down in the realm of 23% year to date. We're still in a bear market. But, hey, every journey starts with a step. And if this is our step back to new highs, hey, I'll take it. It was an amazingly fun, bullish day. In fact, it was so bullish that I think it was timely to say, of course, we have to go through three ridiculous things that maybe you missed in the news cycle today. And the first one just so happenly relates to a bear. So I just want to quickly share that. I actually don't know how loud the volume is. So let me turn it down just for a second. Not too bad. So basically, this guy straight up, a climber, attacked by a bear. And he fought it off. Like, just posted today. Obviously, this is making its rounds on social media. And not only did it happen in real life, but as I just showed you with the stock market, it happened in the economy as well. So in both real life and stock market life, bears got their asses handed to them today. So that's an interesting thing to report. And also shout out to this absolute just alpha of a male for literally punching and kicking a full-grown bear. I bet he got more of a workout than he really bargained for. So that's the first crazy thing I wanted to share with you, just in case you don't spend 24/7 on the interwebs the way I do. The second thing is BTS stars to serve military duty in South Korea. I don't know how much of my particular audience is a fan of BTS, but just so you know, yes, they are going to have to follow through with their particular military duty. Moving on. This was a little bit more sad, but I think important, especially in the world of streaming. Amouranth, I believe her name is Caitlin, one of the biggest streamers, one of the most prolific OnlyFans content creators, reveals she's married and is being abused by husband in concerning Twitch stream. Now, with this, obviously, before we get into it, understand if anything of this story, you're like, wait, that's kind of normal, right? It's not. If for whatever particular reason you find yourself in this situation, please understand from the bottom of my heart, in no way is this normal. She has gone through extensive steps to provide many details. This isn't one of those things of like, oh, should we just trust her by her word? No, she has quantifiable evidence. And then on top of that, there's some things just about like, oh, is it for money? Is this a big act? I mean, she's one of the most prolific content creators in the world of streaming and on OnlyFans. She easily makes over 8 figures a year. This is no skit because if anything, I guess releasing to the public that she's married, that could be damaging to her brand. So if we just look at this from a logical standpoint, I 100% believe her. 100%, because logically it makes no sense for this to be a lie whatsoever. And then on top of that, in her stream on Twitch, she provided a clear amount of evidence. But anyway, you might have heard of her before. She's very big, a far bigger creator than I am. But if you listen to the exchange that she's had with her husband on the phone, like he was threatening to kill her dog, and then she was talking about how he like controls her finances, and he was like willing to break it off and just give her million. And I know you're thinking just $1 million, but understand every year she makes over 8 figures, and I guess he like controls it, and then her finances, and then from there there's pictures of like when he was like tomahawking things into the wall and like breaking her door. It's a crazy situation. This was all breaking yesterday, and I wanted to, I guess, cover it. I mean, you can watch the videos for yourself. It's super sad. And I guess, just like I said, from the bottom of my heart, my thoughts go out to her. And if you find yourself in a particular situation like this, understand that there are definitely ways to get help. And it is by no means normal or appropriate in any fashion. And then on to like what I would like to consider one of the crazier parts of the day. So SteveWillDoIt. I had the opportunity to meet Steve at the NASDAQ representing Rumble. He was there. He was the big announcement. He recently got kicked off of YouTube. And I can tell you, in the world of content creator, I've met many people who are leagues larger than I am and most likely are going to be bigger than I ever will be. And Steve is probably one of those people. He's well known. He's massively popular in the Gen Z world. And even then, I could just tell you, he is a very genuine, nice, warm guy. If you don't know about Steve, check it out. But anyway, he got kicked off of YouTube, and I think had something to do with like he had a sponsorship that was related to a gambling company, and they didn't give him a warning or anything like that. They just completely nixed it, and then he basically filed to get his channel back, and YouTube said, nope, you cannot do that. And obviously he's of the opinion, like many people, that this is more of a political stance, I guess is the best way to put it, from YouTube, because he was in a podcast with the former President Trump and ended up giving him a watch, I believe a Rolex, not that that particular detail matters. But Steve, obviously now signing with Rumble, shout out to Rum, which like I said, I invested more in today. He's one of these guys, kind of like Mr. Beast, but also like he likes to do his partying. And what I think is awesome here is like, he's kind of living up to that in the most genuine, caring name. So obviously recently, Florida has been absolutely ravaged by Hurricane Ian. And Steve, right away, first thing he does is step up and see how he can help. And then it turns into a hilarious Steve thing. Does something absolutely great for humanity and then makes us laugh even more about it. 12 families who lost their home in the hurricane now have an RV to live in with a generator. I love what I do. I want to say a big F you to YouTube for involving me in this political stuff and canceling me because I don't align with their political agenda. I make videos to make people smile. I make videos to change people's lives and do good in the world. YouTube canceled me because they are political and are all about money. YouTube... I was going to try to say this without laughing, but it's just so freaking funny. YouTube, eat my sack. I don't need you to change the world. I can do it without you. And then just doubles down. So funny. Eat my sack. So I just wanted to share that. Especially on top of it, we do have some legitimate news from Rumble today that they are progressing in how they want to do their ads. So if you are a content creator, I highly recommend you check it out. I myself am right now literally multi-streaming to both Rumble and YouTube. You can have both. And recently their CPM has, at least for me, come close to doubling. However, they've been doing their new ad stuff. So that's awesome. And congrats to Steve. And I appreciate that in one way or another associated with you doing such a great thing for the people of Florida. On to the biggest news of the day. Kanye West, the artist formerly known as Ye, agrees to buy conservative social media platform Parler. Now, that in itself is crazy. It really is. I mean, just coming out of nowhere. But it's even more ridiculous when you look at it through the lens of everything that's been going on. So not too long ago, mid-September, Kanye West, he cut ties with Gap, which you have to understand, that was a multi 8-9-figure deal he had going with Gap. And he said a king can't live in someone else's castle once again. So this started in mid-September. Then from there, as you can see, in early October, he was with Candace Owens and they were wearing a White Lives Matter shirt. And then that got pretty crazy. Obviously, that got some steam in the world of social media. And then from there, it just kept going. So he was allowed back on Twitter and there was this whole thing of Elon congratulating him. And unfortunately, he used that opportunity to tweet something that rightfully so got him in a little bit of hot water. You could read it here highlighted. But let's admit it, it did come off a little bit anti-Semitic. I mean, he admits he was a little sleepy, but then he said DEFCON 3 on Jewish people. It wasn't a good thing. And then right away, he was murked off of both Twitter and Instagram once again. And then this whole Parler announcement comes out and we are seeing, I guess, Kanye with Parler and then Elon Musk with Twitter. And people are making a joke of they're going to combine to make Twirler. And then it gets even crazier. This is a little bit ago, but JP Morgan Chase, which we're going to be talking about their earnings, big bank earnings, a lot of them happened between Friday and today. So we'll be talking about them. But they literally cut off Kanye. And they're like, we are not going to use banking service. Like, we're not providing you banking services anymore. They said it had nothing to do with the tweet, which in reality, if it had to do with the tweet, I would understand it more. But they're saying, nope, it didn't have anything to do with the tweet, which makes me really confused, especially because remember, JP Morgan is still the bank that provided services to the likes of Jeffrey Epstein. And we have some commentary on this from Kanye West with JP Morgan. Just quickly want to share this.
You know what I'm saying? JP Morgan, I put $140 million into JP Morgan and they treated me like shit. So if JP Morgan Chase is treating me like that, how they treating the rest of y'all?
That's outrageous, yeah.
And this murderers with Chase accounts.
Yeah.
That's what I'm saying. I am outraged. By the time people always, they want to calm it down.
Because no matter what, you didn't break no law.
I didn't break a law.
No matter
I didn't
what,
break a law.
The bank shouldn't be a judge or jury on anything that's
but
going on.
But this is
It's actually that final comment that I really like. A bank shouldn't be a judge or jury. And that's kind of how they're acting, especially when JP Morgan has doubled down and said it had nothing to do with the tweet. If it had something to do with the tweet, I get it. You could say, hey, I'm a private business and I choose to not deal with the likes of people like XYZ. I would get it. But they are doubling, tripling down, saying it had nothing to do with it. It's like, well, okay, why did you randomly stop your banking services? So clearly Kanye has just been like on a wild ride lately. And then even today he was seen wearing a Satoshi hat, kind of referencing Bitcoin. So little interesting there. So not only is he fighting against social media, but he's fighting against the entire banking industry. And then that brings us literally to today's developments of Kanye buying the conservative social media platform Parler. And this is his quote on it, just so you know, the finances of this particular deal are not public. But we did get this interesting comment from Ye. In a world where conservative opinions are considered to be controversial, we have to make sure we have the right to freely express ourselves. Now, that's kind of interesting. I mean, you could take it on face value of like, does he really just care about freedom of speech? Is he another, I guess, modern day entrepreneur who's particularly fighting for that? Or maybe does he have other motives? Like, is he going to make this the next social media platform? Is he going to take on banking? Is he somehow going to take on both? Whatever it is, in a million years, if you asked me yesterday, what's going to be the big news of tomorrow, AKA today, I would have never, ever guessed what this is. If I had to bet any amount of money, this is just the start of this particular narrative. I would practically guarantee that this storyline is going to get much more interesting, far more complex. This is just day one of it. So as that does happen, as the story unravels, I'll happily share it with all of you. But this is as of now, as of day one, October 17th, this is where we are at. All right. And then once again, just a shot of Satoshi, the hat on Kanye. This was literally from today, just kind of, I don't know, in a weird way, I would say taking a jab at JP Morgan and the traditional banking system. And hey, why not? Because have you looked at the world around us? Maybe we do need to switch a couple things up here and there. Now on to arguably an even more crazy thing. I feel like today's entire show is just like, hey, can I outdo myself with the craziness of today, October 17th? And this is recent, and we have President Biden with his ice cream, which I found out apparently he has a massive affinity for. And not only is he eating ice cream, but he's talking to us about the economy.
I'm not concerned about the strength of the dollar. I'm concerned about the rest of the world. Does that make sense? Yes. Our economy is strong as hell.
Now, I know the audio was a little soft, but once again, this is the quote. I'm not concerned about the strength of the dollar. I'm concerned about the rest of the world. Our economy is strong as hell. Now, the reason I needed to show you that is to also understand, with the audio being soft, I wanted you to see he was saying it while just chomping down on his favorite Ben & Jerry's. You gotta love it. I mean, that's entertainment at the highest level. We talk about walk and chew gum. Imagine being able to eat ice cream and talk economics. That's just next level content creation. You gotta love it out of our president. So anyway, let's dive into it. Our economy's strong as hell. Okay. Posted within roughly the past 24 hours. Talk about timing. So this comes out of Bloomberg today. Forecast for U.S. recession within year hits 100% in blow to Biden. This is just wild. As a person who has been following the markets for a while and I consume it day in and day out, you never hear 0%, you never hear 100%. People within the market, they understand that there's an infinite amount of variables, so they like to live within that gray area of 1% to 99. They never like to make guarantees. 0 and 100, that's like a guaranteed thing. They're like, there's no doubt in our mind, hell will literally freeze over before this occurs or before it doesn't occur. Like, it is a guaranteed statement. We have Bloomberg coming out today saying, seriously, I know we've been told that like we're not going to a recession. Both our government, the current government regime, and also the central bank, our Federal Reserve, led by Jerome Powell. So basically, you have Jerome Powell and his cronies. You have Biden and his cronies, all giving us this wishy-washy thing of like, no, I don't think we're heading there. Oh, we're going to get a soft landing. Don't worry, we're going to pivot. It's transitory. They hit you with all these terms that I don't even think they know what it is. And then Bloomberg, right after the whole ice cream gate, comes in and says, 100% we are fucking headed to a recession. Like, talk about the worst timing ever for Bloomberg to be like, we're going to it. So crazy stuff. And for good reason. Percentage change in consumer price index. So CPI by category: used cars, gasoline, meats, electricity, food at home, new vehicles, all items, alcoholic beverages, apparel. And yes, am I particularly perturbed that alcoholic beverages have increased by 9%? Yes, but a little bit of a secret here, as long as we'll keep it between us. If you consume enough of it, you forget that it costs 9% more. Just a little food for thought, just a little bit of expert input on the particular matter. But overall, yes, things are more expensive. And recently we know that's overall to the tune of 8.2%. And for those of you who are potentially new and you're like, well, what should we increase at per year? The answer is 2. So we're over 4x higher than where we should be. It's almost as if injecting $9 trillion into the economy out of nowhere was not our best idea. But let's talk about some of the positives. I don't want to be a negative Nelly. I'm reading a couple books on psychology, and obviously we're creating our own parasocial relationship, and I don't want you guys to see my ugly mug and then just somewhere deep in your gut have a negative thought. So I need to balance it out. When you look at me, I want your emotional reaction to be, That's what I'm going for here. I don't want it to be overly elated where you're like, dude, I love this guy. He's awesome. But I also don't want it to be super sad. I'm going for a strong sense of maybe emotional confusion. Basically, I just want you to relive your entire middle school process. All right, let's just throw that out there. Let's be honest with each other. So on the positive side of things, basically where we are now from a seasonal perspective, I mean, this is the start of bulls starting to rip faces off. Like, this is where bulls are commencing of just absolutely harpooning the bears from a seasonal perspective. Now, once again, that doesn't mean it has to play out this way every single year. There's some Octobers that have been horrifically bad. I just want to let you know where we're at in seasonality. This particular season, though, could be bucking the trend. So this is from Charlie. There's actually two things from Charlie that we're going to be going over. U.S. Treasury yields end of 2021 to today. You can see that literally all the yields have exploded. So in 2021, that's kind of this red-orange line, and the blue line is more recent of where we're at. As you can see, all these yields, every yield is ripping up, which means those associated bonds are going down. And I've shown you other graphics, but this is really just hammering home the fact that the whole bond sector is like just fucking imploding. There is no other solid two-word descriptor of what's going on with bonds right now besides fucking imploding. Like, take it home, tell your parents about it, especially if you're a teen watching this and you want to talk to your parents at something at the dinner table tonight. That's the term. Like, seriously, as you're eating your Kraft mac and cheese, which I love, especially if you add in hot dogs, look at your parents. And like, there's going to be that awkward lull because you no longer have anything to speak about with each other because, you know, you've spent your entire 12 years of life with them. Look your mom in the eyes, look your dad in the eyes and be like, how about them bonds? And they're going to look at you like, what? And then just say, fucking imploding, right? Give it a try. Let me know how it goes. I'm excited to hear your reports. Let's just say that it's your homework. But anyway, what you need to know, yields going up, bonds going down to the degree that we are far past the total financial loss of 2008, 2009. I know at that point it seemed more cataclysmic because equities by percentage dropped more. But this time, if you count bonds into the whole scenario, if you throw that into the mess here, it's the nominal loss is far greater. And unfortunately, it keeps getting bigger and bigger and bigger. Another not so positive thing that we saw from Charlie today, with total return data going back to 1928, so almost 100 years ago, number of years in which both the S&P 500 and 10-year Treasury bond were down, this happened 5 times, 31, 41, 69, 18, and 22. The number of years in which both the S&P 500, basically the barometer for the overall market, and the 10-year Treasury bond were down more than 10%. This has happened one time, and you're living it. You are literally living an historic event. This has not happened before in 100 years worth of market data. Just to clarify, most of the time, if people are kind of in exodus from equities, they're like, cool, we'll just load up on bonds. It's the safe thing to do. And thus, because everyone's buying bonds, bond prices go up, yields go down. But in this weird scenario with the economic slowdown prompted by the pandemic and also very poor monetary decisions and also mess ups in the supply chain and also just what's been going on with the Fed fund rate, we're in a debacle where we've messed both things up. And that's exactly why this is the first time it's ever happened in basically a century. Now, to get really nerdy on you, it comes down to the Fed and what the Fed is doing with the Fed fund rate. And it looks like there's another 99.4% chance of the next Fed rate hike, which is coming on Wednesday, November 2nd. Make sure you mark your calendars, is going to be another 75 bips. Essentially, they're going to really end us at 4.5. That will be the terminal rate, on the year. So most likely we'll get 75 bips in November, then 50 bips in December, then 25 bips in January. You might be thinking, why are they doing this? Well, the more they jack it up, that's going to dampen demand because that Fed fund rate, that trickles down to all other forms of loans. And if loans themselves are getting more expensive, i.e. that interest rate, there's going to be less borrowing. If there's less borrowing, obviously demand goes down, and it always comes down in this world, a game of supply and demand. The Fed has no control over supply, but they can lessen demand, and then they hope that that essentially ends up helping with the interest rate. But remember, this isn't just a thing going down in the US. Globally, everything is also pretty much on fire, and it's particularly in fire in Europe for many reasons. But the particular, I guess, sub-fire I want to talk about right now is in the UK. UK Prime Minister Liz Truss, the new PM, she's been in the job for about 6 weeks, faces serious pressure to resign after failed budget. 6 weeks. They're like, dude, you get half a strike and you've already used up 3. UK Prime Minister Liz Truss is facing calls to resign from within her own Conservative Party just 6 weeks after entering Downing Street. She probably doesn't even have all of her furniture in there yet, and they're already saying, get the hell out. Truss's economic policies and their reversals have ricocheted through the finance world, leaving banks questioning the Prime Minister's future. So what's been happening, particularly from the end of September to like right in the start of October, is their central bank, their Federal Reserve, the Bank of England, the BOE, has been going back and forth. They're playing one side of the fence and they're like, no, we don't like that. Then we come over here. They're playing a game of hot potato with themselves. So they're going from hawkish to dovish. And they're not getting anything successfully done because they're basically a tug of war scenario. And her and her cabinet members and the people around her are pulling equally in both directions, leaving them absolutely nowhere. Excuse me. And last week, it got so out of hand that the previous Ministry of Finance was fired. Last week, he was in the job also not, I think, a week less than she was. So they kicked him out. His name was Kwasi, right here, the finance minister, Kwasi Kwarteng. So he got the boot. And this really related to his concept of kind of tax cuts. And you don't want to be... Tax cuts are kind of a dovish thing. They're kind of in the world of quantitative easing, which are the two things you don't want when you're fighting inflation. Now, it's not exactly quantitative easing. I'm just saying it's in the ballpark of being dovish when right now you need some hawks to fight inflation. So anyway, right away, we have this new guy, British Finance Minister Jeremy Hunt, new to the job. The UK Finance Ministry, Jeremy Hunt, rolled back swaths of the government's controversial tax cutting plans. So basically, he said, no, that's dumb. We do not want to do that because we're still at a 3-decade high level of inflation. Just so you know, here in the US, once again, we kicked their ass. We're at a 4-decade high level of inflation. So as always, America wins. But I just wanted to share some commentary that he had, I assume at this point, technically yesterday.
We are a country that funds our promises and pays our debts. And when that is questioned, as it has been, this government will take the difficult decisions necessary to ensure there is trust and confidence in our national finances. That means decisions of eye-watering difficulty.
That's good verbiage,
but I give
eye-watering
the House
difficulty.
and the public this assurance: every single one of those decisions, whether reductions in spending or increases in tax, will be shaped through core, compassionate, conservative values. What we are seeking is long-term sustainable increase in the economic growth rate, and that is a central policy of the Prime Minister, which has my wholehearted support. I am not against the principle of taxing profits that are genuine windfalls, but as he will know very well, in the energy industry, it is a very cyclical industry, and there are businesses that have periods of feast and famine, and you have to be very careful that you don't tax companies in a way that drives away investment. So we have said that nothing is off the table.
So basically, he had a really base take, kind of the opposite of Kwasi, the guy who got fired last week, and that kind of makes sense. So anyway, with this type of rhetoric, with these type of decisions, what we ended up seeing was sterling, the pound, and also the euro ended up going up, which means really that their bond prices went up, their yields fell, and by their, I mean gilts, basically UK's treasury, the way we have US treasury, our bonds, our government bonds, well, across the pond, their government bonds are referred to as gilts. So their gilt prices went up, their yields went down, and this also inherently had an impact on the dollar index tracked by Dixie. And just because it's always a relative comparison, the fact that the euro and sterling went up, well, obviously on a relative basis, the dollar went down, which is good because the dollar has been ripping to the moon, and it's good to take a little bit of a breather because a higher value dollar, not so good for business. don't forget, if the dollar is expensive, whenever you're talking about a multinational business, if they're doing business in another country, by the time they convert those profits back to USD, well, if the USD is more valuable, that means they're on a relative basis losing out, i.e. hurting the top and bottom line. So that's the quick and dirty explanation of it. But obviously, it's not just those three currencies I mentioned. It also has a big impact on the yen. The yen hits a new 32-year low of 148 under pressure from strong dollar. So this is still going with that rhetoric of like in the short term, we're seeing a little bit of a breather. Sterling going up, the dollar index coming down. But this movement is because of sterling. It's because of the euro. Unfortunately, the yen, they are still, I guess in a certain sense, not really representing a weak economy. Well, I guess you could argue that because they're not being as aggressive in fighting their inflation. So people would rather store their money in USD compared to the yen. So they're doing that. And as they're buying it, obviously the price goes up. And as they're selling the yen, obviously the price goes down. Now you might be thinking, all of it sounds super, super bad. So who's making money on it? Well, luckily for us, we have the Nancy Pelosi stock tracker, one of my favorite accounts on Twitter. And recently it was disclosed that she, whom most likely her husband, Paul Pelosi, exercised 200 Google call options, as in he converted this contract into 20,000 shares. So that's the recent move out of Pelosi, and sold 100 MU call options. So that's Micron for a loss of almost 400,000. Sold 50 NVIDIA call options for a loss of 361. And also Disney call options expired for a loss of 132. So we're talking about in the realm of just under $1 million. And I mean, that's a bad trade for sure. These final three, we don't know where Google's going to end up going, but this is some pretty serious losses. It's about 900K. And it almost makes you wonder, was he really that bad at trading, or do they understand the social and cultural backlash that she is currently getting, especially as she's like the one manning the deals, talking to TSMC in Taiwan and like kind of at the helm of just these semiconductor decisions. So like, are they purposefully taking on these losses, or is he just shit and like she's no longer sharing the secrets of her job with him? Regardless, I always find these absolutely comical, because if you didn't find them comical, you'd probably scream, because the fact that our politicians and their spouses and their immediate family members can wheel and deal like options and investments blows my mind. And then the people who make the laws of if they can or can't do it are them, so they're self-governing, which is absolutely bullshit. And you might be thinking, but Matt, I bet they have an ethics committee. Well, luckily for you, last week we covered that, where most of the time the punishment from the ethics committee, it's not even the $200 fine that they could do. It's them saying, hey, please don't do that again. Like that would be like super, super sick if you just didn't do it. But not to just be mean to Nancy Pelosi and her family, it is widespread. Bostic, a member of the Fed, reveals trading missteps adding to Fed ethics scandal. So another piece of scandalous news. Ooh, drama. Another top Federal Reserve official revealed he violated central bank policy on financial transactions, leading Chair Jerome Powell to open a probe into the latest chapter of a broader Fed ethics scandal. Very quickly, before we get into this, I want to show you what's going on. So they made a decision, just because like they're super, super, super nice dudes, that Fed could no longer hold their stock. So they all sold it right around here, which you might be thinking, hey, that's not far off from the all-time high. Yeah, you're right. They sold within a couple percentage points of the all-time high for ethics reasons. Let's just throw that out there. Anyway, Atlanta Fed President Bostic said Friday that his asset managers made trades during restricted periods and transactions had been inadvertently omitted from his financial disclosures. I just hate when that happens. You know, if I had $1 for every single time one of my asset managers made a trade during a restricted period that I didn't even know about, well, I'd be fucking broke still, because that's super illegal. And if you're telling me a guy who is the Atlanta Fed president isn't closely tracking his own money, that's bullshit. That is crazy, crazy bullshit. Bostic's revelations reopening a damaging ethics scandal that erupted last year and led Powell to overhaul trading rules to support public confidence in the Fed, and an acknowledgement that the previous oversight lacked rigor. And by lacked rigor, they mean was as holy as Swiss fucking cheese, and they could do whatever they want. Right before they did quantitative easing, which just graphically to show you where that happened, we found out about the pandemic, and then right here we bottomed out. Well, the week before we had various Fed members switching from bonds back into equities. And then don't forget, because of ethics concerns, they all sold pretty close to the top. Now, I'll give it to them. They didn't top tick it. I'm in no way saying they top ticked it, but they're doing a lot better than most of us who are currently down 23% on the year. I take very seriously my responsibility to be transparent about my financial transactions and to avoid any actual or perceived conflicts of interest. Well, you can't be that careful, because the fact that I'm talking about this, it was written up in Bloomberg, and the whole story sounds a little bit sus, doesn't mean that you were that careful with perceived conflicts and even potentially legitimate conflicts. So another day has come and gone, and people in positions of power, some of whom are elected, are using the position to line their own pockets, which I don't think that's in the oath. Now, I've never taken a government oath myself, so I'm not the expert on this particular subject matter, but I don't think it's in the line of skirt your job responsibilities and do what you can for personal gain. I don't know. Maybe I should look into it after today's show. Moving on to more of the specific things of what's going on. Today, we got the Empire State Manufacturing Index. Not so good that it dropped by 9.1 when they were expecting a drop of 5. You always want more manufacturing, especially in an inflationary environment. Coming up tomorrow, we have some stuff related to the world of real estate, which has been on fire lately. We obviously, throughout the week, not only tomorrow, but for the remainder of the week, have different Fed members speaking. We get the Beige Book on Wednesday. As always, on Thursday, we get the initial jobless claims. And then we are getting common inflation expectations on Friday of this week. In terms of macroeconomic reports, I know that I sound like a broken record, and usually I'm like, oh, this is crazy. Like every day is even more crazy. This week, in reality, in terms of macroeconomic reports, is actually a little bit calmer. But what's not calmer is earnings season. So earnings season for this particular fiscal quarter kicked off last Friday, really the final day of the week. And then this is the week where it really gets going. And it's going to be kind of nutty for the next 2 or 3 weeks after this one. So we had Bank of America, Charles Schwab, BNY Mellon, a lot of banks reporting. Same thing with Friday. Usually the finance sector kicks you off. So we're going to be talking about JP, and we're also going to be talking about Bank of America. Just so you know, tomorrow before the market opens, we get Goldman Sachs, we get Johnson & Johnson, Lockheed Martin, and then after the market closes tomorrow, we get Netflix, United, Interactive Brokers. Right out of the gate, what we've been recently seeing from JP Morgan, Bank of America, Wells Fargo, Citi, basically everyone but Morgan Stanley, all these big banks have been beating. So my thesis is that, yes, Goldman Sachs will follow suit and beat with their earnings announcement tomorrow. I don't have that much of an opinion on Johnson & Johnson or Lockheed Martin. I'm interested to hear what's going to come out of Netflix tomorrow, just because like their whole new thing is a new lower tier where they also have ads. And United, I mean, Delta beat last week, so United, and then we also have American, and we also have Southwest. Southwest might be next week. Basically, all these big airline companies are roughly doing the same thing. So I think if one beats, they kind of all typically do. That's the pattern I've noticed. So Delta beat last week. I'm fully expecting United and American to beat this week, just to get that all out there. Now, I know, like I've said earlier, I want to stick to what I promised you at the start of this particular show, where I want to give you some emotional whiplash. Remember how I promised how it would be kind of doom and gloom, and I showed you all those stats, and I showed you the insider trading? Well, now it's time to confuse everyone and show you that maybe, just maybe, he says with a high inflection in his voice, almost prepubescent at certain levels, making you wonder if my voice has ever actually dropped. Just maybe, things aren't that bad. Bank of America tops estimates on better than expected bond trading, higher interest rates. So what you need to know is 81 cents versus 77 and 24.6 billion versus 23.6. So they beat on top and bottom lines. And I know my particular viewership. They're like, dude, you can't just read me that headline and make me think like you're taking some sort of U-turn. Well, here's actually what I want to get into. The Bank of America Q3 2022 financial results posted today. Well, if you find this thing on the interwebs and you go to page 23, here's the thing that I was looking at because I have nothing else better to do with my life that gave me a glimmer of hope, that put a flicker in my eye that maybe we're not going to a cataclysmic downfall. Consumer creditworthiness remains strong, and it remains beyond strong. We're talking about Arnold in his prime. So consumer credit card, average 770. Folks, I don't know if I have a 770, and I'm allegedly a person who pays attention to my finances. Consumer vehicle lending, okay? FICO, 789. Are these numbers real? Residential mortgage, 768, and then home equity, 792, even higher. This one's also particularly interesting because with 792 and like home equity, as in they took it out, like were these people prepping up to buy the dip? That's one thing that I was curious. But overall, like if we're looking at these FICO lines, that's crazy, crazy interesting. And you're going to find a lot of information in here. If you are bored and have time, I implore you to read it. But then when you look at that also through the lens of JP Morgan, the numbers that we're seeing from just kind of consumers, it's interesting. It's to the point that you could say we've actually, this GDP drop, you know how we're talking about recessions and like, oh, okay, 2 negative GDP quarters back to back, that's not good. Well, the numbers that we're seeing out of these big banks, it is highly suggestive that the GDP drop for the 2 quarters really has to do with our trade balance and not really being driven by the consumer. We're actually seeing strength of consumer. Unfortunately, not in all consumers. There are some fancy schmancy stats, and I think I have them somewhere. But basically, for people within lower income, as in below 50K, yes, according to JP Morgan, it does look like they're going to be running out of their disposable excess income, most likely by mid-2023. But if you look at mid and then especially upper, well, they have quite a bit of cushion in terms of their saved disposable income. And yes, the spending is outpacing their saving, so you don't want to see that. But in terms of how large their cushion is, well, statistically, it's pretty solid. And we're also actually seeing an uptick in certain sectors. Not all sectors, but certain sectors, especially for that mid and upper tier. I mean, if you look at Delta, and I'm expecting this out of United, and I'm also expecting this out of American, that kind of these leisure luxury trips, well, they're seeing an uptick. And then all of a sudden, if you start to dive into it a little bit more, you have certain luxury brands, which, I mean, I'm not a luxury brand shopper. I mean, of course, I shop at Moon Gang's merch website, but beyond that, I'm not too integrated into that particular world. But the stats are showing us that we're actually seeing an uptick. So middle and upper class based on income. And obviously, so like we have nominal spending that's going up. And to some of you economic nerds in here, you're going to argue, well, nominal spending's up because inflation's up. But nominal spending is up higher than inflation, which is actually telling me that the middle and upper class based on income, they're actually still kind of living life, doing what they want. Now, there's certain businesses that are not going to be successful in an environment like this, but what's like a big clothing one? I don't know, like for some reason I'm thinking of like Gucci or Louis Vuitton, those types, and also like kind of these luxury travel, such as the airlines. I believe, what was the number out of Delta? Whatever the percentage was, it's escaping me right now. The flights from the US to Europe, like clearly just for vacation, is actually increasing. So this earnings season, and we could talk about it a little bit more now just because the macroeconomic reports are a little bit boring, but if what we're hearing from the big banks is any form representative of how things are about to play out, this actually might be an absurdly bullish earnings season. An absurdly bullish earnings season. So that actually is kind of in alignment with the seasonality that we're seeing not only for this particular week, but this month, and also the Santa Claus rally from this period all the way into the end of the year. So I know a lot of this is kind of like doom and gloom stuff, but I kind of wanted to give you more of that balance argument of what we're seeing in terms of the average Joe, like you, like me, is not as dire of a situation. And one part that highlights this are these crazy high FICO scores that we're seeing on average. Like, these are truly insane. And we're seeing similar rhetoric out of all these big banks. Once again, out of all the big banks, the only one that messed it up was Morgan Stanley. All the other ones, I mean, they're looking green. Speaking of green, we got to talk about Roblox, which I have never personally enjoyed their service. But what I'm being told is that it's basically like crack cocaine to kids, and like parents are saying their kids spend like endless amounts of hours on this. But anyway, Roblox really popped today. Roblox shares popped 20% on September user growth. Daily active users were almost 58 million. That's up 23% year over year. And hours engaged were 4 billion in September, up 16% over year. On the stream earlier this morning, 4 billion, we converted that to years. That's about 455,000 years in 1 month. Truly insane. So I just wanted to share that about Roblox. Moving on to Meta, a company that doesn't seem to be doing the best. Meta ratchets up Apple rivalry with ads targeting iMessage. So basically, Zuckerberg, who maybe is or isn't a human, was calling out Apple, saying, hey, their security and encryption is not that good. Meta CEO Mark Zuckerberg posted a picture of an ad in New York's Penn Station that suggests Meta's WhatsApp is more secure and private than Apple's messaging system and traditional text messages. WhatsApp is far more private and secure than iMessage, with end-to-end encryption that works across both iPhones and Android, including group chats. So he's taking some shots at him, which, hey, whatever, we're here for drama. Now to move a little bit into the world of crypto, just so you know, Bitcoin green 19.5, ETH also green, trading at 1,300 and a little bit of change there. Bitcoin miners are feeling the heat as the network's mining difficulty reaches an all-time high. I was thinking about ratcheting up the rivalry between Meta and Apple. So mining difficulty, if you've probably heard of in this world, like hash rate and that type of stuff, basically the more and more miners there are, well, the problem has to get more complex, i.e. the difficulty hits a new high. Typically, when you see this, like miners are people who are very attuned to what's going on in the world of Bitcoin. When you see this, typically you actually see some bullishness in Bitcoin. And I, in reality, would not be surprised whatsoever if that plays out, because we know Bitcoin is highly correlated with the NASDAQ, and the NASDAQ is highly correlated with the SPY. And right now, in what I believe is going to be a bullish earnings season, I think we might see a little Papa-Rooney here pretty soon. U.S. launches investigation into bankrupt crypto hedge 3 Arrows Capital. If you don't know about this one, this is pretty much the reason we're not on Voyager anymore. Voyager had about 50% of their money with 3AC, and then when 3AC blew up because of the whole Terra Luna thing, they brought down Voyager with it, and obviously they are being investigated, and their investigation doesn't stop there. Texas securities regulator launches investigation into FTX US and CEO SBF. So not so good. And this relates to exactly what you've heard about in the world of crypto is, are they or aren't they securities? Crypto exchange FTX, its FTX US division, and founder and CEO SBF are being investigated by Texas regulators over potential securities violations. Regulators are probing whether yield-bearing accounts offered by FTX US should be considered unregistered securities. Kind of that same vibe that you might have remembered about a year ago at this point of BlockFi, maybe even 6 months ago. The enforcement division is now investigating FTX Trading, FTX US, and their principals, including SBF. So a little bit of maybe not the best news for them, but the money and support behind this guy, it's kind of hard to imagine that it's going to get to anywhere that it's like a big issue, but who knows? That's just my guess on the matter. So that's pretty much what I had for you today. I think we kind of covered all the major events of the day. I truly hope that you enjoyed it. Feel free to post your questions. And as you are posting your questions, I kindly remind you, hey, if you want to help me out with the algorithm, it would be great on YouTube to hit the like. That's an algorithm thing. On Rumble, it's great if you hit the like because that gets us into the battle leaderboard. And don't forget to subscribe on both. In real time right now, we are in an attempt to run the Rumble account up to 50,000 subscribers. We're a hair under 47, so we're almost in that final lap. And honestly, my personal experience recently with Rumble has been nothing but amazing. So a little bit of support over there, not only does it mean a lot to me, I'm sure it means a lot to the Rumble team because they took a chance on me about a year ago at this point, and it's worked out beautifully. YouTube can heat my sack, but they can suck a fart out of my beehole. Long on Rumble. Locals best because of Matt meme picture capability. It's a reverse turnaround Tuesday on Spy tomorrow. Honestly, it's going to have a lot to do with the earnings. When we get into earnings season, I don't like so much to think of it as like a pure technical. It's kind of fundamental of like the big companies, did they beat or not? So I'm going to be paying attention to the earnings and also just kind of what happens in the overnight action. And I say the overnight action because I want to know what's going down in the UK, particularly Liz Truss, and what are they doing with gilts? Like, are they still going to push the entire bond market into the depths of hell? You were one of my first subs on here at that time, Joey Meatballs. You know, I appreciate that. And a name like that, I hope you stick around for quite a while. OMG, is this what YouTube chat is like? Sometimes. I've never been here before. Other Matt. Well, I appreciate you dropping in, man. I hope you enjoyed the show. Out of quick questions, my own morbid curiosity, whether you're on Rumble or whether you're on YouTube, could you quietly or loudly raise your hand if this is like your first time? You're like, who the hell is this kid? And why do I all of a sudden feel better about how I look on a relative basis to this walking bag of mayonnaise? Buy low, sell high. Go Birds. Go Birds. They were the only positive of my football weekend this past weekend. I got destroyed in fantasy, and Penn State also got smoked by Michigan. So the only thing I have to hold on to, is the success of the Eagles. I'm saddened that Matt doesn't remember me from Discord. Is it the other Matt? I mean, anyone can just change their name in here on YouTube. Your username is not like specific. Michigan State, though. I actually didn't see Michigan State. I know Michigan's about to play Michigan State. I was going to cuss you, no interaction until now. I am now satisfied. King Kyle. I'm about 30 minutes south of Happy Valley right now. Oh, that's awesome. What's that? Doesn't start with a J, like that, whatever that major town is right below Happy Valley. This is my third time at my house. Try watching the Iowa offense, Matt. All right. Let me just see. Try watching the Iowa. Let me see if I missed anything over here. Rhino. Super chat $1. Thank you. Shout out to Rhino. All right. I think I got all the major questions. I hope I did. Lewistown. Isn't there like... What is the other one? I swear there's one that starts with a J. I don't know why I'm losing my mind. I'm sure it'll come to me right after this. Anywho, that's exactly what I have for you in this show of The Unnamed Show with me, Matt Kohrs. I guess the Matt Kohrs Show. Seriously, though, I do appreciate your good vibes. Shout out to Public. Don't forget to check them out. Pinned to the top of chat in the description of the video. You get free stock, no payment for order flow, no market makers. It's, a brokerage you can actually trust. Other than that, to everyone who helped me out, not only by hitting the like button and subscribing, but even if you spend a second of your day with me, I truly, truly appreciate it. I hope you have a great evening, and I will catch you tomorrow morning, 9 a.m., bright and early, ET. Peace out, Girl Scout.